Hi everyone, how's it going? Nice to see you. It's Tuesday. It's the financial thing. Tuesday evening, morning, afternoon, Wednesday for some people. Livestream. We're going to talk about the stock market. We're going to talk about cryptocurrency. We're going to talk about what the hell is going on in the markets right now. We're seeing some disturbances ahead, some troubled waters. And yeah, it's been a bumpy couple of days for anybody that's invested in commodities and oil, like yours truly. It's been a bumpy couple of days. It's been unsettling. And this is the one thing that I like about my old trusty Vanguard stock index tracker, equity tracker, is not having to worry about the emotional BS that comes along with trying to pick out sectors and pick out stocks. And, you know, if you're a Netflix buyer or a Tesla buyer or a Twitter buyer, I think we've got Google earnings coming out today, maybe Microsoft. But yeah, you've seen some turbulence. I mean, Tesla, I think, down 10% today. It's unsettling. So what is going on in the markets, why it's happening? We'll take a look at that. We're going to take a look at the trusty Trading 212 portfolio and pick up its beaten, bloody body off the ground because it's had a rough week. Very volatile. We're going to take a look at that. So thank you for spending your evening, hopefully not more than an hour tonight. If you can hit that thumbs up, please do. I hope you find the information helpful. Don't forget, Thursday will be our traditional peer-to-peer lending stream. And back at 7:30 p.m. United Kingdom time. How's your week going? Where are you watching from? Are you having a good week? Yes. I hope so. And I hope mainly that you're staying the course. Don't let these stock market fluctuations change your game plan. I think this is very important. It's very important to stay the course when troubled times might be ahead. And I do see some troubled times coming. I really do. I think everybody is just waiting for the troubled times to come. There's a lot of uncertainty out there with the investing world. It's kind of the one thing I do like about peer-to-peer lending. It does give you that certain amount of stability, I think, in some cases, if you invest through the right companies. Stocks, however, do not do that. Certainly cryptocurrencies don't do that. But you're also not going to get those upside returns that you can get through the stock market. Let's talk about one trade this week. Thursday is going to be a big day for one of the stocks that we have in Trading 212, specifically added for the purpose of trying to hit the upside on Thursday's earning reports, which I think is going to be a good one, so we'll talk about that. Anyway, quick hi to everybody in the stream, as always. Darren in Cambridge. Chimp self is here. Clouding over in Southampton, says Mike Powell. I don't know, by the way, if you can see the new little block. It's a new cryptocurrency mining device that I picked up this week called Block, which I don't think is going to be very profitable, at least not in the early days. But and I'm going to tell you a little bit about that other device that you can see right there, which we've talked about in the past, the Aware Element. What happened with that? I know things kind of went a bit pear-shaped with that. So anyway, good evening, Mark Mason. Good evening, Patty and Jeff in France. Mark Mason. Hi to everybody. Paul News in Stockport. Watching Bitcoin go up and down like a yo-yo. Absolutely. Which I think is a really good thing. Remember, I'm happy about that. I bought more Bitcoin today when it was at $39,600 US, and I watched it go down to 38,800, wishing that the crystal ball would have told me that I could have bought at $700 or $800 lower. Alas, wasn't the case. But I like these low prices. Could go lower. I like the idea of being able to accumulate more now while the prices are low. For that, what I think is inevitable uptick forward, explosion upwards eventually, but not yet. I don't want it to happen yet because I need to get more cash to buy. Paul Bagworth and Kenilworth. Colin is here in the Peat District. Peter Vince, of course, in the cooler Leatherhead. Such an interesting name for a place, Leatherhead. John Moore. It sounds like one of those horror movies, right? Coming to you. To a screen near you, Leatherhead. The monster. John Morgan is here. Overcast, Swindon. Brian in Woburn, Akichak in Accrington, Robert in Crete in Greece, of course, Alan Duffy in Scotland. Jeff said he sold all his positions in eToro and trading 212 for cash, kept Vanguard and bought gold. Gold, the gold is doing so well today, but I saw a couple of the gold stocks in the red. Seems like weird what's going on with gold today, considering oil seems to be on the upswing. But hi, welcome to everybody. I'm glad you're here, really am. Let's get into it. I'll go through some, share my screen and take a look at the markets. What is happening today? We have the S&P 500 negative 1.76%, the Dow 1.6% in the red, and then the FTSE, which is a little bit in the green. S&P has been having a difficult week. Let's look at the 5-day chart. Started back here on the 21st, 5 days ago at 4,500. Dipped all the way down to 4,203. So, about a 300-point swing. Gave us some hope backwards, and then no, things have not been looking good today. So if we zoom out a little bit, you were looking for a good entry point. If we go back here to, let's look at this 6-month chart. January 22nd, my birthday, alas, 4,796 points, the S&P 500. So you're at right now a 500-point discount, so 11% discounted below where we were in January. So, some could say, well, it's a pretty decent discount to be able to get in if you're a long-term trader. If you're a long-term buyer or an investor, you're trying to buy up your index trackers. You can do it at a discount right now. And the FTSE hasn't fed as badly. What are we, 1 year? So a high point of 769 just on the 8th of April. And now down 73.68. So 300 points. A little bit less than 5%. So FTSE, is not having a terrible 1 year from, we're still only a year ago, 6,900. So we've seen somewhat of an uptick, but I think, again, I think tomorrow this will be in the red. This number, I think the FTSE will be in the red tomorrow, if I had to make a prediction. This is just the way the markets are. We've got definitely pressure from inflation rates. We got these increases in interest rates. This market should be cooling. It should. This is pretty natural. I'm surprised it's not going further in the cooling red zone. But we have this thing called TINA. There is no other alternative. A lot of people don't know where to put their money. Even if we look at gold, right now the SPY Gold Trust, where a lot of people think might be a safe haven. We look here from the 8th of March at 191, we've come all the way back down too. So even in times when the market is going down, gold is kind of getting hit too. So is gold necessarily a safe haven? Not necessarily. Let's take a look at the trading 212 portfolio. We were at the mid 16,000 point right here. You can see on April the 25th, on Monday, we dropped actually all the way down to 16,024. Now we are back in the 17,000, just inching above 17,000 pounds. I thought things were looking a little better this morning at 17.3, but had a pullback. Barrick Gold suffering in the negative today. Some of the energy stocks were doing pretty good. Laredo has finally gone into the red. LPI 1.04% in the red on the whole, so that just hasn't moved yet. But not too worried about it. I know that it will. Oh, I don't know 100%, but I'm pretty confident that it will. Tullow is back in the red. Now, this is our big bet for the week. This Peabody stock, which was up about 8.5% earlier. I should probably show you the screen. So again, let me show you the Barrick Gold chart. All the way from 25 down to 22. So having a bit of a rough week with them. But let's look at Peabody. This is our bet. We're down almost 19% in the last week. This is a part of a position here that I have riding on this week. And I have a pretty sizable amount of this stock, not only in this portfolio, but in another one. So betting on Thursday when earnings come out that this stock is going to really take off. So same kind of trade that I did with the Bicycle Therapeutics, just feeling like this stock being in the coal sector is probably not priced in for the earnings report. Not exactly sure why that big pullback occurred this week, because we've seen I bought in at $30, bought more this week, and then just watched it absolutely crater down $7. So it's a pretty sizable drop, 18%. But Thursday is going to be the day when I hope that this stock position really takes off. We'll see. We'll see if my prediction is right. VET kind of been a bit choppy this month. It was still up 26% for the last 3 months, down about 16% for the month. So really a lot of volatility going on in the markets, which is quite interesting because if we look at what's going on with the oil prices, let me see if I can pull this up for you. You look at the oil prices right here. I'm actually seeing very, very strong oil prices right now. Crude still over $101. Brent crude $104. So I'm not... All I can say is I think these pullbacks in these oil and commodity stocks are just people taking profits. General retracements on... we've seen such big runs on these oil stocks that it's pretty normal for people to be taking profits on the way up, and then we see a big pullback, and then what was that? Pullback the day before, and then a bit of a bump up today, and then another pullback. So looks like general trading, and really a lot of these stocks are just moving on general sentiment. I think necessarily not really over fundamentals. Long term, you would expect them to move on fundamentals, but short term, a lot of sentiment involved. Now look at Tesla, absolutely getting pretty hammered today, 11% in the red. Elon Musk, of course, taking over Twitter. It's going to turn the company private. People within Tesla not reacting very well to that. Tesla investors. Could be a buying opportunity here for Tesla. I don't know. It's not something I really tend to watch all that closely, but a lot of people believe Tesla is certainly a good stock for the future. So these red opportunities are always times where you can look at it and go, wow, do I have the cojones? Do I have the stones to buy in when everybody else is moving? Yes. The answer should be yes if you believe in a company or you believe in the index. You believe in the index trackers. When it's all going pear-shaped, this is the time. This is the time to buy. So look at our trusty Vanguard tracker, last priced at £740 and 34 pence. So really not moved as much as I thought it would. So 740, we're at 774 on the 29th of March, so just a little bit less than a month ago. So it's come down only £30, so about 4%. So still performing really well. And again, if you're a long-term investor and you don't want to worry about these emotional swings, I mean, look at this now gone into the 16,000 range. If you don't want to worry about seeing these ups and downs, look at this. And you don't want to worry about having large positions in individual stocks, this is really the best place to be. Look at the 52-week low of £642. So if you've held this and you just kept on buying this index tracker and you're at 740 right now, you've gone up £100. Should be pretty happy with what this index tracker is doing. So I definitely think to sleep well at night, this is just a really great choice. If you're an aggressive investor and you're trying to invest in cycles and sectors like what I'm doing in this portfolio, you're probably not going to sleep well at night as well, or maybe as well. I certainly don't. I worry about these bets that I'm taking on this, because all it would take is one black swan event. We've seen it with the interest rate hikes from the U.S. Federal Reserve saying we're going to put them up, and they're saying now prediction that in the U.S. interest rates are going to be on mortgages, 30-year mortgages, 6 and mid 6% next year, and then almost maybe up to 8, the mid 8% in 2025 if they can't get this inflation under control. That's kind of scary. That's going to make the market react. This is Barron's talking about why the stock market is dropping. We got Microsoft and Google reporting today. That's a big deal because these companies, they make up such a large percent of these indexes. So even if you look at this Vanguard US index fund, which has 4,082 stocks, right? If we look at the portfolio, Apple, Microsoft, Amazon, Tesla, and Google make up almost 16-17% of this entire index. So if they have big earnings report days or even bad earning report days, they are going to move these indexes. So Apple, it's 5% of the entire index, so Microsoft too. So we are talking about, why is the market jittery today? Maybe it's something to do with those. We're talking here about the vid cases in China spurring the possibility of more lockdowns in the country, which could disable U.S. companies and other companies around the world from accessing supplies of goods and services, bring higher costs, and forcing companies to raise selling prices, which also, then you're talking about increased inflation. Once those selling prices go up, money is running into safe assets as interest rates start to rise. You're going to get more in the bank. You're going to get more on bonds and yields. But that doesn't really help you because inflation is high. So again, we talk about this all the time. You're getting low interest rates in bonds and savings accounts. You're paying high inflation rates, forcing people to take more risk. But both Microsoft and Google are going to be expected to post really good profit results today, and the stocks are down 15 to 18% for those two stocks. So we might see a good bump in the markets tomorrow based on those earning reports. Elon Musk reporting that he is going to buy Twitter, and their deal is done. So what is the deal? Why is this a big deal? Well, it's a big deal, number one, because he's one of the richest guys in the world, if not the richest guy, but he wants to bring back free speech. There's been a problem with Twitter. The ex-president being removed from Twitter, things like that. He wants to bring back free speech. He's going to turn the company private again. I think he paid more than what the shares are worth. And that'll probably become a subscription-based model. And it's a big deal in many ways. It's a big purchase, over $40 billion for this. So the market's reacting accordingly to that. This was a really good example. We saw Netflix absolutely get hit over the last couple of weeks. But this guy, Bill Ackman, who is a very, very well-respected hedge fund manager, he had acquired more than 3 million shares in Netflix. And this goes to show, how the professionals probably don't know much more than we do. But this guy apparently has lost about $400 million as he watched Netflix absolutely take a huge poo. And he was holding a lot of Netflix stocks. So we look here from $348, actually higher, almost $400, back here in late March. And then we saw this earnings report and the subscriber growth drop. So it took $120. It's about a 30% fall, and it's been steadily rolling down the slope ever since. Even today, just down 3.9%. So, Mr. Bill Ackman, I think he was implying a loss of about $400 million. I've read reports that it's closer to $600 million. And that his fund, Pershing Square, lost confidence in their ability to predict the company's future prospects. So he acted promptly. He decided to sell the shares and took a massive loss. This goes back into the narrative that I'm always talking about hedge fund managers, manage mutual funds, manage unit trust funds. These guys, they get it wrong, and they don't know always what they're talking about either. So this is why I'm saying you're best just to stick your money in an index tracker. Handle it yourself. Don't let these guys be the boss over your money, these hedge fund managers, these unit trust managers, because they get it wrong. I mean, this guy had 3 million Netflix shares. He bought it in January. Let's see what the price was in January. Look at this. The stock was almost $600, 600 US dollars when he acquired it. He's went from almost 600 down to 225. That was the professional handling people's money. Morgan Stanley said the S&P 500 will fall sharply and join an ongoing bear market. This is kind of the narrative that they've been talking about on and off for a while. Of course, again, these rising interest rates that are going to slow global growth. These types of news stories really just scare people and spook them. I don't think they know any more than us when this sharp fall or this bear market will happen. Of course, it's like saying, I think it's going to rain. Yeah, of course, eventually it's going to rain. All we can do is, I think we're in medium risk territory right now. Just keep watching the markets. And then if you're an investor for the long term, don't touch anything, because you're likely to get the timing wrong. So what's going on with some of these oil stocks? I like this website, by the way, if you are interested in stocks, called Simply Wall Street. They do some pretty good analysis on stocks, but I wanted to show you this Peabody Energy that I showed you in the trading 212 portfolio, which is down 24.3%. I think this is 7-day return. So we're down almost 25% in 7 days, which is not a good thing, right? It's not necessarily a good thing, but I think we got a lot of room to go. This is the analysts, what the analysts think the stock is going to trade to. I think that this is completely wrong. 2650. It's a relatively benign, well, I would say a conservative price to earnings of only 10x. So what do I think this could go to? Just a guesstimate, not financial advice, over $30, 30, 32, 33, up to 35. If you look at the analysis here, simply Wall Street thinks it's trading about 45.4% below its estimate of fair value. So, which is what I agree with. Also, I don't think that analyst prediction is really accurate. But you can see the 1 year on this is up 444%. Almost, 9% more than the US oil and gas industry. 7-day minus 24%. So I actually bought more of this stock this week when it was dropping. I upped my position. I think I doubled it for this Thursday earnings report. So hopefully that's we got that one right. You can see here that simply Wall Street, through its analytics, thinks the fair market value is about 44.42 US dollars. So some definitely ways to go on that share price. And by the way, don't follow this trade. It is high risk. This could quite easily go down, and it will certainly be a short-term trade. It'll probably be, Thursday, pull the trigger, sell it, probably even set a limit order to, in case the price falls too much. If I get it wrong, I might set a 5% stop loss, 5 or 6% stop loss to save it. If for some reason it really tanks, but I don't think that's going to happen. We'll see. LPI also on that list down here. The analysts have more of a rosy view on this one. This is trading at 74 US dollars, and the analysts believe this one is should be valued about 130, or that would be the price target, 130 US dollars, so about 40% more. Down 11.7% for the last 7 days. You can see here, simply Wall Street thinks it's trading at about 65% below estimate of fair value, which is pretty undervalued. We're up 122% for the year if you'd held it at the exactly right time you bought. 8.8% price to earnings ratio. You can see this fair value. Simply Wall Street believes its fair value is actually $215. So if the markets can hold on, there's definitely some upside with Laredo Petroleum. And then one of the other stocks that I have in the portfolio of Vermilion, which I kind of backed off, but still have this position of about 1,200 pounds, which is 40% in the green. And the fair market value on this, according to Simply Wall Street, and you can see this big return here for the 1 year. The fair market on this, look at this price to earnings ratio, only 3.5 times, which is tiny. If you compare that to some of the tech stocks, which are in the 50s and 60s, this is crazy. Fair market value, $43.88, trading at 19.24. So really some potential upsides if we can hang on to this this bull market that is happening within the oil and gas and coal sectors. So yeah, if you're interested and you like to read things like technicals and analytics about stocks, I don't know if they have English ones in here. Let's have a look. Come on. Oh. is that not working? Come on, there we go, Lloyd's Bank Group. So yeah, it's got English stocks on there too, you can read about. Any of the FTSE stocks too, all the analytics there. Look at this 1 year return, 4.2%. Not great. So pretty interesting, pretty in depth. Oh, one thing too about these, if you look at TradingView too, if you look at say you click on the FTSE, tradingview.com, see the technicals here. Then again, you can always trust these. They can really change. From a month ago it was a buy technical, and then you can see a week ago it went to neutral and now sell. This is based on all these technical factors like moving averages and technical analysis that I don't know is always very accurate, because I think a lot of the prices are based on just what people think, right? It's market sentiment. But if you go off of these technicals, you can see here it's showing the S&P as a strong sell, and the Dow also as a strong sell. So yeah, just something to pay attention to. Accuracy to be determined. Let's look at what's going on in the crypto market. We had some hope for Bitcoin. It was looking okay, and then it decided to do what Bitcoin does, give us some false hope, and then send us back down the mountain in a rubbish bin, spinning around. We were at 42,000, trying to breach 43,000 US. Came all the way back down to 38.3, all the way back up to 40,600, and then all the way back down to 38,200. So Bitcoin doing what Bitcoin does. If you were lucky enough to get into the cat coin, you made 1,000%, but who knew about that? Nobody knew about the cat coin. At 0.123456789 zeros 118. Catcoin seems to have done really well. How do you even buy Catcoin? You can buy it through MEXC. These very low volumes here, 65,000 US dollars. You can buy it on a DeFi exchange. This is definitely not something I would recommend. Do not buy Catcoin. But Ethereum suffering really the same. I mean, you look at these two charts, they're running almost up in tandem. 4% in the red. It's crazy how a lot of these cryptocurrencies do. The charts do look very similar. Polkadot. Dogecoin having a good run this week because of the Elon Musk thing. There's a lot of people think that Elon will be integrating Dogecoin into Twitter because he's such a big fan. So we saw this price rise up to 16 cents. Actually all the way up to 16.7 cents, and then all the way back down. So more cryptocurrency volatility to be expected. Not the end of the world. Some big news that came out. Fidelity in the US is planning to offer Bitcoin and retirement plans. They're saying towards the end of the year they want to be able to offer people a way for them to hold Bitcoin and their pensions, which in the US is a 401k. It's called a 401k. It's like a retirement plan. Fidelity said that some of the 401k plans that it administers in the US would soon offer employees a way to invest in Bitcoin through dedicated digital asset accounts. Fidelity believes the blockchain technology and digital assets are going to be a much larger part of the financial industry's future. So I think it's, Fidelity is really paving the way for what I've kind of been talking about, how early we are into what is going to happen with this adoption of Bitcoin into just the general financial landscape. And once you start bringing these retirement plans, I mean, it's hundreds of billions of dollars that people will be able to have positions, whether it's just even a small little taste of Bitcoin. But it won't be a mutual fund. It'll be a plan sponsor that would have a separate account for employees. And these accounts would hold Bitcoin in short-term money market investments, so maybe just cash for liquidity. Bitcoin will be custodied by Fidelity on its digital assets platform, and Fidelity is going to charge about 0.75% to 0.9% in annual fees for administration, custody, and accounting. Of course, it says one major employer has already signed up, and that would be MicroStrategy, Michael Saylor, who has 125,000 Bitcoin on its corporate balance sheet. Obviously, Michael Saylor wants to offer his employees ways to hold Bitcoin in their retirement accounts. I think this is just the beginning. That probably Fidelity is probably going to come into regulation challenges and hurdles until they can figure out with the Securities and Exchange Commissions. But I think this again is just paving the way, wherever it is in the world. The U.S. I think is a good catalyst for other countries to be able to offer this type of thing in retirement accounts for people that want to take on, that little bit of diversification risk to potentially get that upside. So once Fidelity rolls it out and gets approved, I think then it's going to become a snowball. We had a nasty hack this week into those silly NFTs. This Bored Ape Yacht Club, somebody decided to hack their Instagram account, and then what they ended up doing is putting out a fake airdrop message to all the Instagram followers saying, hey, we're going to give you free land on our virtual platform. Sign up here, put your wallet in. They made it look like a really official thing. And unfortunately, $3 million of NFTs were basically duped from unsuspecting people. Unfortunately, these things happen. You just have to be careful. And these Bored Apes are going for silly money, by the way, still is absolutely crazy. 150, 200, 300, 400,000 US dollars for these just pictures of these apes, which I think is, I just don't know. I mean, I don't see how people can spend that kind of money on a digital one-own picture that you could literally copy and save onto your computer. But what's happening is these apes are just getting traded amongst these NFT investors, and they buy it for one price. Look at this one. It's for sale for $413,000. Some poor sucker lost their Bored Ape to a hacker on Instagram. I don't know if there's a way to get it back. But it is crazy. You can see here the price of it is just kept on going up on these Bored Apes that were minted for just a couple of $1,000s. So really big returns on a picture. You can even buy just ridiculous things. There's George from Cryptos R Us. It's YouTuber. I mean, kind of silly. I don't see the value in these things at all. I'm not convinced why I'd want to own a picture of George for $4,000. Well, but if somebody sees value in it, I really don't get it, but it is what it is. Australian crypto ETF launch. That was the exchange traded fund. It was the first Bitcoin spot ETF that was going to be launched in Australia. Apparently has gone delayed due to a problem with the broker that was issuing it. So it was supposed to go trading on April 27th. That's tomorrow. But it is being delayed due to Prime, or the executing broker, who is yet to approve the products, due to a delay in appointing a market maker for the product's launch. Simple terms, it's gotten delayed. All these financial things that go on in the background have put a delay on it, but it'll be coming out soon. So, another piece of adoption news. There is the first African country has adopted Bitcoin as a legal currency and tender. It's the Central African Republic. the first country in Africa to adopt Bitcoin as a payment currency and a worldwide first. The National Assembly unanimously adopted the bill to help put the country's plan for economic recovery and peace building on track. The application of the legal tender implies the acceptance of cryptocurrency as legal means of payment established through specific legislation. So, again, we're still super early. This is going to be the first of many of these I think you're going to see, especially in these struggling countries that have high inflation and weak fiat currencies. We've seen a bit of a delay on Ethereum. This big Ethereum merge that's supposed to happen in June has gotten delayed. Ethereum, of course, second largest cryptocurrency right now with a market cap of, look at this, $344 billion used to power things like these NFT collections on OpenSea. This is how you pay for your $440,000 Bored Ape. You need to use Ethereum, and Ethereum miners get a piece of that payment fee when you make it. But Ethereum is moving away from proof of work, which is the way Bitcoin uses the network through electricity mining. So they want to be proof of stake to become more environmentally friendly, but it's getting delayed because of it's a big project. It's a big implementation, and it's just going to take a while for them to test it. They've been talking about doing this for years, so who knows how long it's going to be before it gets implemented. I don't think we'll see it until 2023, personally, but we'll see. Let's talk about this aware element. This was the air quality machine, or whatever you want to call it. It was testing air quality, spitting out a store. It was connected to these guys called Planet Watch, who were rewarding people who owned this unit. You would buy a license, and you would be paid in Planet tokens, which is a cryptocurrency, for providing that data from Aware to Planet Watch. Planet Watch is basically a data provider for air quality to things like governments, businesses, enterprises. And it seemed like a good idea. I mean, this thing really went up in price tremendously. It was about 299, I think it was the same in the UK, pounds. It used to be half that. So they bumped up the price, doubled it. And then they ended up having a disagreement with Planet Watch. And they fell out with each other, and Planet Watch said, this Aware unit is no longer supported by Planet Watch. And everybody said, oh, we just spent all this money on buying this unit. Because by the time you buy the unit and the license, you're talking about $350. People were expecting to get paid for the data that is getting sucked through this little black hole. So they fell out, and what Planet Watch ended up doing is saying, we'll continue to pay everybody that owns one of those Aware units. You can see mine right there. Right there. We're going to give you 5.4 Planet tokens every day, because we have fallen out with these Aware people and we don't know what to do. So inevitably what happened was the price of these Planet tokens that we promised started to go into the toilet. And you can see here, if we look at the 3-month chart, they're all the way up at 31 cents, US cents. I forget when the announcement was. Let's see when it was. April 15th. But I think it was announced before then about this problem. Let's look at the price on April 15th. See here. I think up here was when it started, at the end of March, beginning of April, when it was announced. And you could just see the price of these coins have absolutely gone into the poo-poo toilet. We're still getting about 25 cents, so about 18p a day for, as Planet Watch is being kind to Aware element owners. They could have said, two fingers up to you, we're not paying you anything because we're not getting data from these Aware people anymore, but they didn't. They tried to do the right thing. Quite scary though, because you can buy other sensors that are attached to Planet Watch. I mean, this company doesn't make any of its own sensors, so it's something to pay attention to if you're into this kind of thing. It's basically providing data. You get paid through these coins, but this one is a almost 2,000 euro device that's supposed to pay out about 100 Planet tokens a day. But if this company were to fall out with Planet Watch like Aware did, then you may be sitting on a very expensive looking spaceship that ends up not really earning you any money. So I think it was a lesson learned. I unfortunately, I was fortunate to get the money back in tokens that I paid for my unit. I sold up here at around 11 cents. 12 cents, so I sold pretty much most of what I had, paid back the license cost and the unit cost, so anything now I figure is just free. You could actually just even turn it off and it's still going to pay you the 5 cents because they're not connected. Planet Watch is not connected anymore, but it's been a big mess and there's a lot of unhappy people, and this is the kind of risks that come along with these projects. You don't know what's going to survive and what isn't. This token does not look like it's going to recover though. There's a lot of bad sentiment over this Planet Watch company, and also Aware. People are blaming Aware, other people are blaming Planet Watch, but it is what it is. That's the risk you take. Binance, by the way, if you're a crypto buyer through Binance, they have resumed their British pound transfers via PaySafe now. You can get money back into Binance from your bank account in the UK. Personally, I don't use Binance that much, mainly on Coinbase, but I know that was a problem for a while, and I forgot to mention this on previous streams. Let's take a quick look at the portfolio, see where we're at. 16,953 pounds. So since we've been on the stream, we've lost, I think it was up to 17,003 earlier, so 400 pound swing. So yeah, let's hope on Thursday this Mr. BTU, this Peabody, can pull through and give us a win, because I don't know that there'll be many more trades like this that can be big winners the way the markets are. Yeah, we need one more win. We got to get this portfolio up to 19,000. That's the goal. So we'll see. Anyway, I hope you're enjoying the stream. Let me know. Let me know if you're not. Let me know if you are. Hit that thumbs up if you can. We're back on Thursday, like I said. Let's see if you have any interesting comments. Yeah, Patty said he sold out all his positions in eToro, kept Vanguard and bought gold. I don't think that's a bad play. I think gold, I was never a believer in gold, but I do think that gold could add $1,000 an ounce in value. Let's see what gold is right now. Give me the gold price per ounce. $19,011. So could this be a $3,000 gold price? I think if the shit hits the fan in the stock markets, you could see gold really start to take off, because people will look for old school safe havens of places to put money in, things like bonds and gold. So you might want to go out and get that nice Cuban link gold chain that you've been dreaming about. Might be a good time. Who knows? We'll see. Timing the market is very hard. Patty, so I hope you're successful with that. Leatherface was from the Texas Chainsaw Massacre. Yeah, Leatherhead reminds me of Leatherface, but hopefully nobody's been massacred by a chainsaw in Leatherhead. Alan, nervous time as I had planned to cash out in 2023 for a new house. Well, if I were planning on buying a new house in 2023, I'd probably stick it in. I probably wouldn't have it in the stock market. I'd put it somewhere that if you were going to experience a 30% loss on that money to buy a house, would that bother you? You have to think about that. Mike says, all resource stocks pull back because of fears about China. In the vid, China is releasing strategic reserves of commodities like metals to drive down prices. I tell you, those Chinese, they're always up to something. Tim Robinson Coaching is here. Hello, Tim. Nice to see you. Tim was on the stream. Yeah, I wonder if Mr. T gets his account back. I don't even want to mention his name because I don't want my YouTube channel to get banned. But I think he would get his account back, yes. I'm pretty sure if I had to place I'd say 90% sure that Mr. T is going to get his account back. Yeah, Netflix they get a lot of competition. There's so many different streaming services now that who knows. Might just go all cash, wait to see how this pans out. Pretty concerning times we're in. Yeah, or take a percentage if you were concerned. Maybe go 50% cash. If these guys get it wrong, what chances do we have? Always thought these guys had insider information. No, of course they don't. They get paid all this money. They read analytics. They read, charts, technical analysis, and they try to make their best guess. But at the end of the day, they don't get it right. I don't know if Ackman got it wrong. Netflix changed their models about subscriptions and plans. Well, he got it wrong because he probably should have known that they were going to do that. Maybe if you're putting that much money into a company, you do have to think about what do future subscription changes or price changes, how would that affect the stock price? So he must have known something about that at least being a possibility. Crystal ball gazing request for 2022 commodities, metals, miners, oil, gas, shipping. Hang on. What do you see? Cloudy, opaque. I can tell you this. Look, if the stock market corrects, all of the prices are going to go down. All those stocks are going to get hit. At least short term, commodities, they're all going to go. So we really need the markets to stay afloat for these to do well. If the markets can hang on, I think they'll be okay. What we're looking for is what do we think is going to happen within the next 6 months? That's my concern. How much more time do we have for this to run? If you look over the long-term graphs, tech seems historically cheap currently. You have to be brave when others are running. Yeah, I think that's a good point. The rotating of sectors is what people who buy single stocks try to do. So they'll move from oil when oil is high into the beat down sectors like tech. But honestly, I'm more concerned about these interest rate rises and what that knock-on effect is going to do to the stock market. We have a possible rate increase in May. I would bet that the markets are going to not like that, but then again, it may already be priced in. We don't know. It's all about market sentiment. It's just very difficult to predict. And if you're in it for the long term, I mean, some of these stocks that we're talking about, that I'm showing you in the Trading 212 portfolio are pretty volatile. They're not blue chip stocks, right? Look at the market caps on these stocks. See if I can move this out of the way. This one doesn't even have information about it. It's such a small stock, but this one's a bigger 23 billion market cap. Flex 13 billion market cap. International Seaways, I mean, that's $1 billion market cap, so pretty small stock. Laredo only 1.28 billion. Occidental's a big one, 53 bill. Warren Buffett's favorite. Peabody only 3.3 billion only. Too low, less than 806 million market cap, and then Vermilion 4.15 billion. So these are not blue chip stocks. These are higher risk, volatile stocks. But if you're a 5+ year investor, you really shouldn't be worried about a market correction. Just buy and hold, buy index trackers, buy companies that you have a lot of faith in, and just don't touch them. Don't touch them, you'll be fine. Apes of the 21st century tulips. That's true. I'm sure the masses of the Central African Republic are all rolling in Bitcoin to use as a currency and excited at the move. Yeah, I mean, their inflation, sure, over there is not good, so they're happy to be able to get out of their fiat currency. I'm using Sweat at the moment, launching in the summer. The more you move, the more you earn. Earn crypto for exercising. That's pretty funny. I've never heard of that. That sounds cool. Sweat. Now you got me curious. Was that actually a real thing? Sweat crypto. Sweat coin? Wow. Look at that. 64 million registered users. That's freaking huge. Oh, I have to oh my goodness. How could I miss this? I'm in. I'm gonna download Sweatcoin. That's awesome. Thanks for sharing that. I love that. Anything you can own crypto, why not take it? Anyway, did we beat the hour? No, we didn't. Thank you for watching. We're going to get out of here. I'm going to let you go. That's all I got for you this week. Hope you enjoyed it. Have a great Tuesday evening. And see you on Thursday for the peer-to-peer lending stream. That's all I got. Have a wonderful couple of days, and I'll see you in 2 days. Take care of yourselves. I'm going to hit the button now. Bye. Take care.